My mission with the Mortgage Report is simple: to save you money. I'm here to provide weekly insight into the market so you can make the best buying decision. I want you to know where interest rates are headed, and I promise to let you know my lock or float position. The Mortgage Report starts now. Hey, what's up, Bob Mortgage Nation? This is the 72nd episode of the Mortgage Report. All right, we're going to get right into it because bond market was not shaping up really well at all last week. Bonds had a rough week. If we look at the charts, we're down overall 33 basis points on the Fannie Mae 30-year 4%. You can see we're sitting at 101.44 right now. But really, we got to come here and look at the post Labor Day pain. We started off in a negative position in the bond market on Tuesday. If you were following me on Instagram, you know right then and there it converted to from a floating position to a locking position, and I held that lock position pretty much all the way through the entire week. Bonds fell hard on Friday, and it was mostly because the jobless number, it was good and it surprised the market. The report showed about 201,000 jobs created, which was better than expectations of 195,000. But most of the pain was coming from the average hourly earnings, which doubled expectations. Earnings increased 2.9% from a year earlier. Now, wage increases are inflation's friend and the enemy of bond prices. And you can see, obviously, from the charts that bonds took a nosedive on Friday. So bottom line, this week, I'm locking. I'm in a locking position. Look, we have a tight labor market. We have still trade concerns. We have concerns and risk of an inverted yield curve. I just don't like where the market is right now, especially since we've broken below several of the moving 25-day, 50-day, and 100-day moving averages. We've broke below several floors of support. Right now, we're trading. If you look at this chart really quick, we're trading below the 101.5 ceiling or floor of resistance. So now that 101.5 mark becomes a ceiling of resistance, and I don't think we're going to close above that mark on Friday. So what we have to look at is going in and still putting a locking position in, because we may fall to the next level of support, which was sitting around 101.28. And we've touched, in the last year, we've touched that mark twice, once in July and then once back in June. So I'm going to maintain my locking position that I started last week off with going into this week. Look, I've been a mortgage advisor for over 20 years, been blessed to provide financing to over 25,000 families during that time period. I watch the markets daily to make sure I can deliver to you the right home loan at the right price. Give me a call. With Bob Mortgage, your dream loan is already within your reach.